The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, into the breach do we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
Well, it's a day where we got above 2,800 in the S&P cash, and the markets have been tired pretty much since last Monday. I'll be doing a webinar on the sector oscillators tomorrow night. And this morning in my daily newsletter, I said, you know, I'm long this one particular stock because it's got an implied put on it in the market, and probably, I didn't quite say it, but it probably is going to do better if the market pulls back a little bit for us. But is a high in. A lot of people are looking at this reversal. They've been bearish for 2 years. I've been bearish and alternately bullish over the last 2 years, always worried, mostly because we didn't have a great deal of volume. Volume has not been a problem. Maybe I'll show it here today, but generally the volume's been pretty good over the last few months. Once we got past all the brouhaha about taxes, everything's been sunshine, rainbows, and pots of gold at the end of those rainbows, and unicorns. Unicorns made from the tears of angels. Everything's been perfect, but that's a lot of times when you get a pullback kind of out of the blue. Are we going to get it because fundamental issues don't look good? The answer is no. What do we do have? We've got kind of early stages of a little bit of euphoria. Happy days are here again. The skies above are clear again. Let us sing a song. Yeah, it is. Happy days are again. We're back over 3% for growth in the country. A lot of people thought it would never happen. In fact, all last couple of years, we've been told that America's best days are behind us. We should just shut up. We should let the Chinese rule the world because that's the way it should be. America stinks. America sucks. We shouldn't try. Just let everybody else have their way. We're guilty. And, you know, in the last year, we've kind of, at least half of us have changed our mind on that. And it's been a pretty nice ride. But the question is, will earnings hold up? Well, we've had a first handful of earnings out there. And you know what? Not that bad. United Healthcare's up 2.5%. We'll look at that today. Citigroup's up about 0.5%. They were up a little bit more than that. They didn't really blow the doors off. They're priced for perfection, so you're probably not going to get a lot to the upside. And if you miss, you're going to get a little to the downside. We've got some other stocks that we will talk about today, but I try to be very nervous when everybody is euphoric and greedy, and I try to be greedy when everybody is pessimistic and depressed. And actually, my webinar is a bit about that tomorrow night with showing a sector oscillator on a shorter term where people go to heaven and hell. But, you know, no one would be happier for me than to go after a few of these low-hanging fruits in the short department. The problem is the good news is just going to continue for a while. Even if the market is tired, even if it's gotten a little ahead of itself over the tip of its skis, it's overshot a little bit. I've heard 40 different analogies this morning about why the market needs to pull back. And unfortunately, when I hear that before the market pulls back, it always makes me think that the market probably is not pulling back. I love to hear it when everybody is bullish. And why the markets are kind of that way, there's sure a huge throng of people that continue to really say the market's going to go lower. And normally when those people all showed up, that's when the market goes lower. Normally when everybody's done shorting, that's when the market goes lower. And I'm waiting to see something in there that says that, other than the fact that we're just all pegging out the bullish sides of every sector I can find, except one, which we'll talk about today. And that's about it. So is there any real evidence? The answer is not yet. I'm also very suspect that this isn't a early Wednesday and Thursday where we pull back a little bit during expiration week, only to see us pin Friday, the tail on the donkey. And for us right now, we'll see what happens tonight with the news, and we'll talk about it tomorrow on the show. But this market would probably destroy the most amount of puts and calls if it could close at S&P 2800 on Friday. So is there going to be a lot of movement between now and then? Option market makers don't think so. Could we just go sideways for a while? Could we see returns in the market that are just slightly higher all year long? We've got a lot of things that we don't know the answers to the questions yet. But it's hard for me to get highly bearish with a few things going on out here. Now, after 3-day weekends, it's not uncommon for the markets to change their personality. So maybe that's a little bit of what we have now. Maybe there is a little bit of a pullback coming on. But we're going to talk about a couple stocks that are saying something different. And with that, we're going to get started. And if there's anything else, we'll get moving to a little bit of history.
And it's all just a little bit of history repeating.
On this day in 1919, the 18th Amendment to the United States Constitution prohibiting the manufacture, sale, or transportation of intoxicating liquors for beverage purposes is ratified on this day in 1919. It becomes the law of the land. The movement for the prohibition of alcohol began in the early 19th century, with Americans concerned about the adverse effects of drinking began forming temperance societies. By the late 19th century, these groups had become a powerful political force, campaigning on the state level and calling for total national abstinence. And of course, if you've ever watched the PBS Ken Burns special on prohibition, you'll understand why it is. I kind of see shades of that now with everybody wanting to get high again. We had to go through probably 20, 30 years of don't drink and drive. I'd like to hear just a 10th of those commercials, don't get high and drive. But no, it's somehow more noble to be high while you're driving than drunk. I don't understand that at all. My guess is that we will probably see the same kind of depths of depravity with drugs as we saw with alcohol, although alcohol is a drug, I know it. But the reasons why it happened in 1919 are not new.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Talked about BNQ last week, and a kind of interesting chart. This is the REITs, and this was the first sector that I could find really breaking down in the marketplace. It did so on okay volume, we'll say that. Let's go to the daily here so we see this a little bit better. And you know, you tried to break back into that trading range today, but these REITs continue to probably be the weak and weakest part of the market. You had kind of a huge spike. It gave it back up today. It's not back into the trading range. You need to close above 90 with 79.39, which is the March 10th low of last year. REITs, of course, a lot of malls, residential REITs. This includes a great deal of things. But if the market's going to take a header, generally the worst amount of damage done to a market because of the high leverage implicit in REITs is that this sector gets hurt the worst. It is the only one that is broken down so far, so we can't get too excited yet. But we do have at least one small indicator that a pullback is coming. So anything else exciting in the market? We'll look at a few with earnings. This morning, we heard two announcements. One was NXPI, the near-field communications chip manufacturer, is rejecting Qualcomm's offer. Qualcomm, of course, trying to be bought out by Avago, Broadcom. That opens the door, a little clearer takeover for Qualcomm. Qualcomm will probably likely continue to pursue a NXPI deal. But for the moment, it was up a little bit pre-market, thinking that it was a little bit more likely that they'll get bought out. Now, the second part of this is that it came out with vastly improved numbers also before the bell, talking about going from about, I think it was about 480 earnings per share next year to $6.80. So a good 50% boost in this. If it hadn't come on a day where the market was pulling back probably a whole lot more, but certainly looks like it's going to test the 69.28 level. And there are a lot of shorts in this thinking that this deal would never get done with Broadcom. So probably a bad day for you to be short Qualcomm. But like I said, there's a handful of stocks out here that probably didn't do well last year or even the year before. These things are kind of turning around. And if you're willing to take a look at some of these, we've got Qualcomm at what's it, 50 cents off the high of the day, but it's still up $3. There's going to be a handful of these things that are going to be very interesting. Again, we've got some spikes out here. Everybody's going to call for the end of the world. This is options expiration week. So if we're going to have a pullback, it's probably going to be a doozy. But my guess, we're going to see a lot of people go short now. They're probably going to get squeezed out, get to Friday, it's going to close at 2,800. And my guess is if you're going to pull the trigger, if you can get one more push higher, nobody shorts, volume all falls out, that'd be a lot more entertaining to me as a trader than trying to catch every first little move off these highs in a market that's been jittery for a while. So we'll continue to look at that. Okay, what else do we have going on out here? Well, gold continues to hold well. It's up $3-4, something like that. Silver's up almost 8 cents. And it's going to be a little tough on the miners. The miners do tend to pull back with the general market, but they will outperform to the upside after a couple of weeks of a market pullback. So if you're in gold and kind of have a good position, probably a good time to sit on your hands. Nothing out here says sell gold or precious metals. Copper's down almost nothing. So the commodity rally continues to be fairly strong. Doesn't seem to be a lot in that. Oil is down 47 cents. Kind of interesting to know that we get the first read, or got the first read this morning, of the total production for crude. We are now above in the United States 10 million barrels a day, and that exceeds the height of 1970. So we have to go back, what, 47 years? 34, yeah, 47 years to find out us making and drilling and getting as much oil in the United States as we did then. Cars get roughly 2.5 times the gas mileage that they did on average back in 1972, so it goes a lot farther. But that means natural gas also is going to be produced as a byproduct. Drilling was higher, and I'll try to find those numbers here during the break. But a lot of oil wells coming online last week for the Baker Hughes numbers, and natural gas is down a nickel. Don't want to rain on your parade, but you only have about 2 more months before natural gas probably gets a glut of new natural gas. My guess is they'll have additional problems in finding places to store it fairly shortly as soon as the winter kicks off. All these new drillers, at least to some level, kick off a lot of natural gas. But we didn't look at G-log, did we? G-L-O-G, is that it? Am I thinking that's right? Yeah, gas log. These things kind of came off a little while ago, but what can you say? Give me a call at 877-927-6648. Email me at path@tfnn.com. And, of course, you can always put a message in the den. And, I had a thought today. It's like minus 50 in Russia right now. How does that affect winter wheat? I don't know enough about winter wheat. And I guess probably because I don't care. I'm not a big commodity guy when it comes to wheat and everything else. If I had a real interest in it, probably be more. It's probably why I spend a lot more time on tech stocks. I understand them. I understand the issues with them. But I see stuff like one of the what can you say? Worst winters in a long time in Europe. And they're playing. They're praying for global warming. They don't have much going on right there. Okay, let's take a look at some stocks. Now, Microsoft, one of the bigger ones out here today, if I can actually type correctly. MSFT, let's take a look at that. The reason I want to look at this one is because you may have a fairly interesting play in Microsoft, even on the pullback out here. Once a stock hits $90, 80% of the time it will hit $100. And while you might get a little pullback here, this may be one very entertaining trade with 10-11% back to the upside. Andy's talking about winter wheat here, so we'll find out about this during the break and get back with you.
If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And the Baker Hughes numbers from Friday, U.S. total oil rigs were up 10 to 752. Horizontal oil rigs were up 4 to 654. And, of course, 10 million barrels a day, baby. Drill, baby, drill. We make oil again here in the United States. So, and then, you know, we've got, 3 places in Alaska and a couple of places in the Gulf that have some huge known resources that are going to be drilling in the next year. So, maybe we'll be up at upwards of 12 million barrels a day in a year and a half from now. So, you could always turn back on all those shale places too. So oil looks like there is no peak oil. Remember that big lie? Speaking of all kinds of stuff like that, CSX after the bell tonight, we're going to get a read on just how much stuff's moving around the rails. Now, this one broke higher and through resistance going back to December 13th. That was 58.36. It was 6.5 million shares. You got 4 million shares already. Now, this thing's come back in, but earnings out after the bell. My guess is a lot of people already piling on that one. You got to think that with all the strength in the commodities, you're going to see this one do well. The question is, are earnings past what it can actually provide? Again, almost all these things are priced for perfection. But my thought is if they give a fairly decent read about moving a few more things, especially heavy things like steel, iron, commodities down the roadways, and especially a lot more crude coming out of the Northwest, things should be pretty rosy for this company. We'll know that after the bell tonight. When we get in tomorrow, I think a little of this pullback is apprehension on what will happen tomorrow in some of these broker dealers and banks. We've got a new high, but again, no signal out here on Bank of America. You do have a pullback, but of course, earnings at 7 a.m. for those guys, but no signal yet. Energy from that November 15th low, fairly decent. So nothing out here really saying or screaming that these banks are ready to bail on us. Now that may change, but right now, nothing. Goldman Sachs also before the bell tomorrow morning. Now that one's at 7:35. So we're going to get a couple hours before the bell starts and know who for the bell tolls. Anyway, spiked into its previous high, December 22nd, 262.14, got to 261.76. And what do we see in this one? Well, got 3 million shares. So pretty good day out here. Energy is actually very good off this January 8th low. So far, so good on Goldman Sachs. But again, we'll know a lot more tomorrow. Alcoa, which used to be the stock that started the earnings cycle, no longer. This one opened lower, opened a little lower. Tried to rally, couldn't rally, but volume's about half of that. We're going to see them at after the bell tomorrow night at 4:10. So they'll be in the trading of futures. Down fairly light volume again. Nothing really broke here. If there's one a little vulnerable for price for perfection, it may be Alcoa going forward. Then we get into Thursday, and that is Mr. Morgan Stanley at 6:55 a.m. He's got some dark cloud cover on Friday's little pop. Volume is going to be about the same, maybe a little bit more, but certainly that's a little dangerous doji. But you're 2 days away, a day and a half away from earnings on Morgan Stanley. Why this thing's at highs? Could they disappoint? They could, but is there any signal out here? Any break of a trend line? No. So kind of continues to be problematic. Now, one of the other ones that I like is, and will tell us a lot more about what's happening in this, at least in our market, is J.B. Hunt. This is a trucking company. No sign, even a light volume pullback so far today. If trucking's good, that's going to mean that the economy's humming. Doesn't mean that the stock market will go up, but kind of cuts off the idea that the stock market is pulling back because the economy's pulling back. Again, just the opposite, maybe a little bit of inflation going on, handful of other things. Now, Friday, we get back into the energy earnings with Schlumberger. It seems like Schlumberger should be like a bed company, doesn't it? Oh, the Schlumberger 5,000. It's the best sleep money can buy. But no, They're in the crude oil market. This thing looks like it wants to go tag $80.89. You had a little pullback today. Again, volume's going to be okay. You went through the only existing gap out here. That gap had 14.5 million shares. You did that last Thursday with 10 million shares. So probably going to act as support around 76 bucks. Don't see a lot of surprises at all in this. The question is, does it pull back a little bit and then go test the $80.89? I think you'd have to have a fairly significant miss for this thing to fail. But the energy off the bottom, that December 6th low, has not been anything like weak. It's been strong like bull. And that would suggest maybe we get a little pullback if this thing fails, and then you go back and look at it again. The price of oil is not the only thing that makes money. It's, a lot of these people like Schlumberger are in the field of supplying tools and products for drilling. And as long as they're drilling, baby, drill, baby, drill, these guys will do well. So let's check back in the markets here and see if anything else is going on. And we're off 8.5 points on the S&P cash. It's the first day in forever that we've had kind of a nice pullback that stuck. My question is if this is just options related on a short options week, which we're only going to have 4 days. So are they going and trying to level this market out already by selling puts like they have the last 3 months in a row, where they've actively done it? I'm seeing a little of that today. Question is if we don't get into Wednesday tomorrow and whole hogs sell them. But I was looking at putting a short on. This is kind of a stream of consciousness show today on Priceline. And I wanted to look at this one because I really kind of liked it for a potential short. And I like to buy puts on very expensive stocks. And I like to go long very cheap stocks because that's the most money you can make. That's the most leverage you can get in a market generally. The problem with Priceline is that I was looking at puts. This is before the market even started to wane today. And while this thing was up in the 1940s, I was looking at spending 75 to 80 bucks for 1,900 puts to go into March. And why I like the idea of the trade, man, I went through a lot of these puts. People are asking the moon for them already, and there's no sign that these things have failed. When puts are this expensive already, it generally gives you a good indication that too many people are already buying them. Maybe March we see a top in this market. We'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we have some emails in here asking me what I think about NVIDIA. Is this thing double topped? You know, the energy was pretty good on the way back up for NVIDIA. I thought by now there'd be a lot more competition in this part of the market. There so far is not. And they've got some new products that are fairly groundbreaking. I think that there was a bit of hype about self-driving cars. I think those are still far in the future. But the energy off this low, 180.58, was incredibly good, especially for the weeks, including the weeks in December at the end of the year. So you had a nice pop out here. Volume was fairly good. Is there any kind of systemic change in that business? Not that I know of. So could it pull back to $200? It could. Does it need to consolidate at these levels? Yes. Is there any kind of signal that says this thing is done? The answer is kind of no at the moment. And does that mean you're not going to get a pullback? The answer is no. But again, I would be so much happier if this pullback wasn't coming during options expiration, especially in a options expiration week, to think that maybe we get a little bit of a pullback and then a push up to 2,800 for the close on Friday. So we'll keep an eye on that. My guess is a lot of people are going to pile on short here, probably going to get squeezed on Friday or into Friday into the weekend. And then we're going to find out if nobody is shorting on Friday, they've given up the ghost. Maybe that's the time to do it. We are off 14 points on the S&P cash, which is the first time in a long time that we've had anything like that. But again, what are we looking for? Diminished earnings going forward, or just a general malaise and selling into the news? But I think that good news continues to come for a while. Some questions about UVXY. And we all have heard our friend Steve Rhodes's work on too much, too fast with the VIX, and what we're in a 20% move on the VIX, but only a 14% move on the UVXY. And again, you've got to know that there's contango and contagion in the futures. But again, that is kind of interesting. Should be, printing about 1050 on the UVXY, and we're not. But we'll see. Every time we've had these big busts, they've kind of turned back. But, a little different than what you would think. Anyway, anything different going on than a little bit of a burp? The answer is that I would suspect that if you are thinking about playing this for more than a day or two, that the play again would be, if you are feeling rather bearish, is the next rally probably into Friday on expiration, because my guess is everybody's getting very bearish like they did in the last couple of months during expiration, only to see the markets rally higher, or probably something like that. My guess is we're going to find out that they sold a ton of of puts today. And like I said, when I looked for them, they were outrageously expensive, which makes me suspect that there were a lot of people going after those things, and the premiums may melt faster than ice cream on a Georgia sidewalk in July. What else do we have? Okay, what else do we have? Got a couple of stocks out here that were a little higher. Let's take a quick look at Home Depot. Again, no real signal, no trend lines busted. You did kind of open a little higher or go a little higher today, a little bit of a pullback on this. Question is whether or not real estate with those REIT numbers mean anything. Lowe's, a lot more wild stock out here. This was up on 14 million shares on Friday, and a big day out here with 14.2 million shares, spiked on 8.2 so far today. But support probably coming back in around 95 on that. Earnings stocks still up is United Healthcare, UNH, at 233.64 for the last print. Now this one is out here with a little doji. And again, maybe we'll look tonight and we'll find some more of these out here with this little spinning tops up here at highs and close and open lower tomorrow. Could you bet on that? And that's the problem. And options expiration week, if this happened last week, would I probably try to pull some shorts off? And the answer, yes. If it was next week, yes. But a lot of reasons for a lot of different things happening during options expiration week that don't mean at least medium or long-term supply and demand issues. So what else do we have out here? I want to look at the other ones. Got a question to look at the SMH's SMH. I will posit a secondary theory, and that is that if the real problem with Intel's and AMD's and NVIDIA's and Qualcomm's and ARM Holdings chips are really as bad as everybody said they were, then everybody would have to buy new computers in the next few years. And these stocks and the semis would have made all-time new highs by another 10 or 15%. What do you think? I mean, would earnings be initially down a little bit at Intel and then massively higher as everybody returns these? I don't think the lawsuits stand a purr of going anywhere. This is a misuse of the product, not a design issue. It does exactly what it was advertised to do. Someone found out a way to do something wrong with it. I guess it'd be the equivalent of trying to sue the airplane makers because some terrorist took it over and flew it into some buildings. Those lawsuits pretty much went nowhere. The lawsuits that had to do with screening the potential customers getting on airplanes had to do a lot better than actually trying to say these guys made a mistake. They didn't make a mistake. And especially AMD, still some news around that. But the question is, if the SMHs go lower, is that not a sign out here that literally people are not going to have to be buying a lot of new designed phones in the near future? Again, stocks look maybe 6 to 9 months ahead. How long does it take to actually get a new chip out these days? For Intel, AMD, Qualcomm, and ARM, could you have new chips out in 6 to 9 months if there was really a huge problem that was devastating the world? I think you could. That would take a big effort for Intel and AMD. But man, if everybody had to buy new machines because they were so scared, wouldn't the SMHs be going through the roof today? We'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. If you haven't tried David White's weekly investment newsletter, The Technology Insider, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Technology Insider. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And or actually next Monday, we've got Halliburton. So there's a little bit more coming in this energy sector. Down a little bit, but earnings fairly close on these things. Still no real bust of the trend lines up in these things. And going into earnings, kind of tough to be shorting these things right now. The answer probably is more about supply and demand. These things have had some nice runs up, and we continue to kind of pull back here throughout the day, off of about 12 points on the S&P cash. But again, when I came in this morning, I thought 2,800 looked like it was for Friday. We busted through it early. Maybe everybody's shorting a bit right here. If the market just kind of goes sideways, maybe just a nice little push higher. Nothing in the way of earnings that looks that bad. And again, it's all about the earnings call. Like GE this morning, it's more about what they're saying about what's going to happen. And, GE probably going to be out of most of the indexes within the year. In fact, they're talking about the split up by springtime. So it sounds like they've been working on that for a while. So we may have one of the stalwarts that has been in the Dow forever and some of the other indexes for the forever being split apart. We'll see what's happening in that. Gold, of course, you know, pretty decent, up $5 today, almost 10 cents on silver. Silver looks like it's popped the gap. And copper kind of trading sideways out here today. So nothing really out here that gives me a sign that something's happened. Maybe those develop over the next couple of days. But does that mean we're taking off to the moon, S&P 3000? No. Could we just consolidate for the next 6 months? That's certainly a possibility. I'm not long or short any of the indexes. I do have positions in individual stocks. But that's kind of what I thought going into this year. Trading the indexes, other than on an intraday basis, kind of problematic. We'll see you tomorrow. Same bat channel, same bat time. Remember to check out my webinar tomorrow night on the front page of TFNN.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.